Good afternoon and welcome to our weekly livestock market update. I'm Brownfield News anchor reporter Meghan Grebner. With us this week is livestock market analyst Scott Brown. Good afternoon, Scott.
Good afternoon, Meghan.
Man, I'd really hoped we could continue with 2 good weeks of positive news, but the quarterly Hogs and Pigs report came out today, and it's not looking so great.
Yeah, that's right, Meghan. You know, I'd looked everywhere for good news this week, and I don't think I have much to share. We ended up with a report that says, yes, we have more breeding animals on hand than we had a year ago. But frankly, more troubling is where we sit in terms of some of the hogs by weight categories. We fell outside of the upper end of the range of pre-report estimates. It looks like to me right now we've got somewhere close to 300,000 more pigs that are going to come to slaughter in this last quarter of 2016 than we would have thought pre-report. So the news there gets pretty bearish pretty quickly.
As we look at some things in that report, let's talk a little bit about herd expansion. We saw contraction when we had the porcine epidemic diarrhea virus. We've seen herd expansion in the last couple of reports. Are we seeing signs of that diminishing?
Well, I do think we're seeing some slowdown. However, I think the one thing that's happened is that disease events have certainly not plagued the industry as much as a couple of years ago. And so breeding inventories, I think, were built in some regards to help get through what were maybe lower pigs per litter and other issues that we were facing in the industry. When we look ahead, I don't think the level of breeding inventory is going to be a big issue. You know, it's much more what happens on that pigs per litter side, and that may make us have to contract at some point in terms of breeding inventory if we continue to see things run as well as they have in 2016.
Scott, you said 300,000 more pigs on hand. As we get into the fourth quarter here, and we're already talking about some stress on the shackle space, what does that mean, and what is this potentially going to mean to producers and their profit margins at the end of this year?
Well, certainly, Meghan, the news is not good, and it only puts more stress on what we have to get through in that last quarter of 2016. And we can talk about potentially, lower prices coming ahead, much lower prices if we aren't careful, as we really stress the packing capacity that we have. Again, I'd like to remind us all too that when you look at pig crop, USDA keeps revising pig crops. 6 of the last 7 quarters, we've got revisions to pig crop data. That gave us another 550,000 pigs, the revisions that USDA made this time. So we're not on the right side of the supply picture right now, and it just makes that last quarter start to look really concerning, I guess, in terms of where prices head.
When we talk about the stress on the shackle space, how does it take the control of the price or the profitability of the price away from the producer and put them at a competitive disadvantage? And how does that do that?
Yeah, I think when you look at who has the upper hand at times, when you have short supplies, I think it leaves producers in the driver's seat in terms of prices, and we tend to talk about margins shrinking at other parts of the marketing channel until we get to consumers. But now that you talk about larger runs, and again, you look at what's happened over the past 90 days, and I think we're seeing the effects of those larger runs of, hey, margins for processors have gone up, margins at other places of the marketing channel have gone up, and they've really hurt at the farm level. And that's going to continue to be at play, I think, as we go through the remainder of this year.
Let's talk about some of the other markets today and this week. Any good news there, or are we still looking at another down week on the livestock side of things?
Yeah, so unfortunately, I think we're looking at a lot of down in terms of what's been happening out there. If you look briefly at cattle markets, feeder cattle sold 5 to 10 lower this week. You look at fed cattle futures, they've been off hard today, been off for the week as well. We're actually talking about current futures contract trading below $1 a pound on fed cattle. We haven't seen that for a long time. So the direction's not good on cattle as well. We were up slightly in terms of choice beef prices this week, if you wanted a little bit of optimism. Cash hogs have been down for the week. Looks like about $3 lower for the week in cash hogs. If for a minute we look at the pork cutout side, down $2.83 this week. relative to a year ago. If you look at some of the products in particular, so ham prices on Thursday closed 39% lower than they did just 3 weeks ago. So it's a pretty large decline in some of those product markets for pork.
You talk about a decline in hams, for example, 39%. We talk about the pressure on slaughter and kill rates with not having enough shackle space. 1998 and 1999 aren't that far out of our memory. Do we need to worry about another incident like that in the pork industry and worry about losing the bottom of it?
So that's always a good question when you get in these periods of time. My response to that is it a possibility? Absolutely. Repeating what we did in those is a possibility. Is it probable? I'm not ready to say probable yet, but I guess for producers, my message would be, if you can't stand that kind of event again, maybe you should be thinking about, how do I want to market animals or forward contract animals in a way that I'm sure that I don't have a problem, at least on a portion of my output. It's getting time to think about some of that risk management strategy on the downside very carefully.
Let's talk a little bit about demand. With all of this pork coming into the market, we talk about how do we continue to grow it, and what are some maybe key areas that we need to look at when it comes to demand for our products here domestically?
Yeah, so we got a restaurant performance index out for August of this year this week as well. Unfortunately, not such good news there. When we look at that overall restaurant performance index, it's below 100, which means we actually had some contraction occurring, and it's been a number of months, I think, since we can talk about contraction in that restaurant performance index. Much of the weakness actually came from what's the current situation index, which has really got a lot to do with just overall customer traffic being down. So expectations still sitting there up perhaps as we move ahead, but that overall consumer traffic being down here in the near term is troubling, because we keep pushing more and more supplies of things like beef and pork to consumers, and we need more traffic, not less traffic, given what we're doing. And perhaps the bright spot could be coming on the export side. We'll have to wait and see. We will get monthly export data out next week that maybe will give us something to be positive about.
Scott, before we go this afternoon, a bill to modernize the Packers and Stockyards Act is headed to the president this week. As we look at a bill like that, what does it do, and who benefits from that type of legislation?
Yeah, I think when you look at what HR 5883 that passed House and Senate would do, number one, I think it helps on the online video side. Number one, producers certainly need some certainty whenever they sell animals that there are safeguards in place to assure prompt and fair payment for the animals that they sell via those newer markets, if you will. And I think this is a bill that actually helps close potentially some issues that are there to make sure those online and video auctions are very similar in terms of how they clear relative to a fixed facility market. And on top of that, provides us with some additional newer technology in terms of how we receive payments. There's only a couple of payment means available, and being able to do some things like automated clearinghouse is important to, again, make sure we get prompt payment and there are no issues along the way. So I think that bill provides some help for producers to make sure that they're promptly paid and nothing happens along the way in terms of getting payments to them.
All right, Scott, any other thoughts about this week?
Well, it's unfortunate that we continue to see a lot of negative news, so we did get grain stocks today. I think you and I have talked often this year about the fact that at least feed prices have been moving down, and that was helpful to what were also lower livestock prices. But the grain stocks report we got, especially in corn, gave us about a 10-cent pop in corn futures as we ended the day today. And so we're even getting feed prices potentially moving in the opposite direction. So no help in terms of the other side of the equation. So not only is it bad from a livestock price perspective, but if we keep seeing feed costs go up, it'll really create some tough times for producers as we look ahead.
Scott, we appreciate your time, and we will talk to you next week.
Thank you very much, Megan.
To have our weekly livestock market update delivered directly to your email box every Saturday morning, make sure to visit our website, brownfieldagnews.com, and click subscribe. I'm Meghan Grebner on Brownfield.